Jaguar Land Rover is now pausing exports over Trump's tariffs. They're not going to send the Jaguars and Land Rovers to us, but they're pausing them, they're saying, to their key markets because they don't want to have to charge people more. Look, they're already charging way too much money. Well, you know, those politicians, they're driving around in Jaguars and Land Rovers. They won't like it. They can't buy a new one. Maybe they'll change the rules for us. I don't know.
Jaguar Land Rover just became the first major automaker to completely halt exports to the United States due to the new 25% tariffs. While other manufacturers are raising prices or adding import fees, JLR took the most extreme step: total market withdrawal. In the next 10 minutes, I'll break down what this means for the 356,000 Jaguar and Land Rover owners in America. We'll cover future parts availability, service issues, warranty concerns, and how this will impact resale values. Plus, I'll reveal which luxury brands are likely to follow Jaguar's lead in exiting the US market. Before we move on, I'd like to ask you a small favor. If you appreciate this content, please take a second to like this video and subscribe to the channel. Over 98% of you watch the videos without subscribing. It costs you nothing, but it makes a huge difference to us. So, did you click the subscribe button? Great, thank you so much. Now, back to the video. Did you know Jaguar Land Rover sold over 100,000 vehicles in the US last year? That number is now dropping to 0 overnight. It's a shocking development that's sending ripples through America's luxury automotive landscape, leaving thousands of owners wondering what happens next. Before this bombshell announcement, JLR had carved out a distinctive niche in the competitive US luxury market. The sleek, sporty Jaguar F-Pace competed head-to-head with BMW's X3 and Mercedes GLC, while the iconic Range Rover remained the status symbol of choice for celebrities and executives who wanted British luxury with genuine off-road capability. The brand positioned itself as the sophisticated alternative to German engineering precision and Japanese reliability, appealing to buyers who wanted vehicles with personality and heritage. What made JLR particularly unique was its commitment to British manufacturing. Unlike BMW, Mercedes, and Lexus, who established American production facilities years ago, JLR maintained its UK-based production strategy. Nearly every Jaguar and Land Rover sold in America was manufactured in the United Kingdom and shipped across the Atlantic. This import-dependent strategy created a vulnerability that competitors simply didn't share. JLR's pricing model walked a delicate tightrope. The brand needed to maintain its premium positioning while absorbing substantial import costs that domestic manufacturers and those with US factories didn't face. They managed this balancing act by leaning into their exclusivity factor. You weren't just buying transportation, you were investing in British craftsmanship and design language that stood apart from the crowd. This strategy maintained healthy profit margins despite the additional costs of importing completely built vehicles. The numbers showed JLR's American success story was substantial. In 2023, the company moved 114,736 vehicles in the US market, 96,089 Land Rovers, and 18,647 Jaguars. While their 0.7% total market share might seem modest, within the luxury segment, they commanded respect, particularly with the Range Rover lineup consistently selling out of high-end configurations. The brand was on a growth trajectory, with plans to expand their electric offerings and capitalize on America's seemingly insatiable appetite for luxury SUVs. Supporting these vehicles was a network of approximately 200 dealerships nationwide, employing thousands of specialized technicians and staff. These facilities weren't just showrooms, they were comprehensive service hubs with parts distribution centers and sophisticated diagnostic equipment. The infrastructure supported roughly 356,000 JLR vehicles currently on American roads, offering everything from routine maintenance to complex warranty work on the brand's notoriously complicated electronics and air suspension systems. JLR's American customer base developed a distinctive profile over decades. Typical owners tended to be affluent professionals aged 45 to 65 with household incomes exceeding $250,000. They chose British luxury for its combination of understated elegance and distinctive character. Unlike the more common German brands that dominated country club parking lots, a Jaguar or Land Rover made a different statement, one of individuality and appreciation for heritage. The distinctive distinctive growl of a Jaguar F-Type or the commanding presence of a Range Rover communicated success without conformity. Warning signs began appearing in early 2024 as tariff discussions intensified. Industry observers noted unusual inventory movements. Dealerships were receiving fewer shipments than expected, and model availability started thinning out. Behind closed doors, JLR began quietly advising dealers to prepare contingency plans. Parts orders increased dramatically as service departments built stockpiles, and financial incentives on remaining inventory disappeared as the company protected its margins. These subtle shifts foreshadowed the dramatic announcement to come. The sudden export suspension stems directly from the 25% tariff increase. Unlike larger manufacturers with diverse global operations and American factories, JLR couldn't absorb or distribute these costs effectively. With profit margins typically around 10 to 15% on luxury vehicles, a 25% tariff instantly transformed every sale into a significant loss. While Mercedes could shift some production to Alabama and BMW to South Carolina, JLR had no American manufacturing capability to pivot toward. The economic equation simply stopped working. For JLR, the math became impossible. A Range Rover Sport that previously retailed for $83,000 would need to sell for over $100,000 to maintain profitability, pushing it beyond the price point where consumers perceived appropriate value. Despite their luxury positioning, there's a ceiling to what even affluent buyers will pay before looking elsewhere. The company faced an impossible choice: sell at a substantial loss or price themselves completely out of the market. While JLR executives wrestled with impossible financial equations, a more disturbing reality emerged for current owners. Their prestigious vehicles were rapidly transforming into automotive orphans. What happens to your $90,000 luxury SUV when the company that built it suddenly vanishes from your country? Dealerships across America are now scrambling to respond. Many JLR showrooms have frozen their inventory, uncertain about how to price vehicles that suddenly lack factory backing. Sales representatives who once confidently discussed 5-year ownership plans now face uncomfortable conversations with both potential buyers and existing customers who arrived for routine service only to discover the brand they trusted has effectively abandoned the market. The most immediate concern for owners centers on warranty coverage. When you purchase a Range Rover with its comprehensive 4-year 50,000-mile warranty, that protection assumes the manufacturer maintains a presence in your country. Now, owners face a critical question: will JLR honor these obligations through third-party arrangements, or will warranties effectively become worthless pieces of paper? This uncertainty extends to scheduled maintenance, recall repairs, and software updates that modern luxury vehicles require. Parts availability presents another looming crisis. Contemporary vehicles rely on proprietary components that can't simply be fabricated by independent shops. Without JLR's established distribution network, owners may soon face extended wait times for critical repairs as parts must be sourced internationally, potentially at significantly higher costs that insurance companies may refuse to cover. In response to the growing panic, JLR has released statements promising to develop mid to longer term plans for supporting existing customers. However, these vague assurances lack specific details about warranty administration, parts logistics, or service network continuity. This situation differs markedly from previous market exits by other brands, which typically provided years of advance notice and established clear support infrastructure before withdrawing. The financial impact on current owners is already materializing. While specific data points aren't yet available, industry analysts expect a significant devaluation of used JLR vehicles. Unlike normal depreciation curves that follow predictable patterns, this tariff-induced exodus has triggered what many predict will be a valuation-free fall. Luxury vehicles already face substantial depreciation in their first years, but JLR owners now confront an unprecedented additional decline due to the uncertainty surrounding long-term support. The competitive response from other luxury manufacturers reveals contrasting strategies. Ferrari has announced price increases on certain models to offset the tariffs, passing costs directly to consumers willing to pay premium prices for their exclusive vehicles. In stark contrast, Hyundai has pledged not to raise prices on its current lineup through June 2nd as part of a customer assurance program, absorbing costs to maintain market share. Ford has taken an even more aggressive approach, offering employee pricing on new vehicles to all US consumers in a bid to boost sales and clear inventory. JLR's exit might represent just the beginning of a larger industry disruption. Several other manufacturers face similar vulnerability to the tariff. tariffs. BMW, Mercedes-Benz, Volkswagen, and Volvo all assemble less than 50% of their vehicles in the US, putting them at risk of the same financial pressure that drove JLR's decision. Nissan's Infiniti brand has already paused production of 2 Mexico-built crossovers intended for the US market. Even vehicles assembled domestically use imported components, meaning virtually all automakers face increased costs that must either be absorbed or passed to consumers. The most troubling aspect for current owners is the likely duration of JLR's absence. Industry analysis suggests this isn't a temporary measure, but potentially a multi-year withdrawal until JLR can either establish US manufacturing capabilities or wait for tariff policies to change. This extended time frame transforms what owners might have hoped would be a brief inconvenience into a fundamental alteration of their ownership experience, potentially spanning the entire remaining lifespan of their vehicles. Not everyone sees these developments as negative. The UAW, United Auto Workers, has publicly supported the tariffs, stating they signal a return to policies that prioritize the workers who build this country, rather than the greed of ruthless corporations. This perspective highlights the complex economic calculations behind trade policies, where consumer interests sometimes conflict with domestic manufacturing priorities. The immediate production impact extends beyond JLR. Stellantis has announced production pauses at assembly plants in Canada and Mexico, resulting in approximately 900 temporary layoffs at supporting US facilities. These production disruptions ripple through the supply chain, affecting parts suppliers and transportation companies that service multiple brands. What we're witnessing with Jaguar Land Rover isn't just a temporary hiccup, it's the canary in the coal mine for America's automotive future. The 25% tariff is already reshaping our market before our eyes. According to Cox Automotive, expect price hikes of 10 to 15% on directly affected vehicles and at least 5% even on those partially impacted. If you're a current JLR owner, now's the time to act. Connect with reputable third-party warranty providers and build relationships with independent specialists who can navigate international parts sourcing. Bank of America predicts US auto sales could plummet by 20% if these costs hit consumers directly. The automotive landscape isn't just changing, it's transforming completely.